Sorry everybody about that. Probably lost a couple of you guys. My got the blue screen of death on my computer. I haven't got that in a long time since I replaced my motherboard. So that was certainly a surprise. That has not happened for a while. That was a problem if you've been following me for a while that it kept happening, but that was out of the blue. So apologize for that. I'm getting my Ninja Trader up, dated here or booted up. We can go over daily charts for sure now. Of course, I've probably got nobody watching me right now, but we'll do it anyway because you can watch the recording. All right, Chief. You can see everything. Everything's normal. Or if you're listening. All right, cool. All right, let's just go over these daily charts while the Ninja Trader loads up. All right, so in the SPY, I was showing you guys before the news dropped that from this swing low on January 13th, we have come back and retraced almost 78.6% of that move. Okay, I did the math yesterday. This is about a 4 point. Let me just put it up here. Just for this purposes. Oop. All right, so if we go to this move here, go to the bottom of it and go to the top of here, it's a 4.66% down move in about 8 days. Okay. Now, if we go from this swing low to the top of here, that will be a 6.58% loss. Okay. That will be 6.58%. So almost 7% to go down to like 575. So that's what we're working with today. Okay. Now, a couple key things here, right? We touched this anchored view up for the year and the 50-day moving average multiple times. Couldn't get past it. Couldn't close above it. And then you got that candle that ripped the shorts out, right? And then the key levels yesterday were 595, then 590. 590 was a huge negative gamma level. If you rip through that, market makers would need to short with the market. That's why this move was exacerbated. Okay, and if you look at the chart here, we actually went right to where? Right, right to, you know what? Let me fix this chart so we get the correct levels here. Let me fix this. I just want to make sure I'm giving you guys the correct levels here. Okay, so you can see that on this chart in particular, we came down to here, right? So where are we now? We are at 586. Let's call it 80. 586.80. We are holding lower prices at the lower portion of yesterday's range, right? We filled this gap right here. That's what we did yesterday. We filled that gap. Okay. So we filled the gap. Now we're holding lower prices. Now that was a big move yesterday. Just bigger than actually this move, right? And do you get continuation? I don't know, right? Do you get a sideways today? Maybe. Do you get a dead cat bounce? Maybe. Well, that's all up in the air. We don't know that, right? Now, if we look at futures, okay, this is futures, right? So, what do we have going on in futures? So, if you look to the left here, this is a previous monthly low right here, 58.66. That's where this overnight session came down to and then found support right at a previous monthly low. So that was December's lows. December's lows. Okay, came right down to there. Now, you do have last month's lows. That's not last month's lows. Is it last month's lows? Yes, last month's lows. This January 13th low, right here, lines up with the 200-day moving average in futures. I don't know if we make it there, but that would be a full retracement of this move. But that's in futures, 200-day moving average lines perfectly up at that level. Like I said, I'm not predicting anything right now. I'm just showing you guys the technicals, okay? So the Qs. Now, at one point, the Qs was relatively stronger than the SPY. Now it's not, okay? Because check this out. What did it do? It retraced 100% of the move. It retraced 100%. Look, that's the January 13th. It came all the way back there. It took away all of this because tech has been weaker, okay? And remember, this is what drives our markets is technology. It's 30 something percent of the market cap weight. So where this goes, usually the market follows. Okay, now why is this weaker, right? Because tech, the 100 stocks, is very concentrated, right? S&P 500 has many parts, many sectors, like staples, financials, and healthcare have not really been dying, right? And you're not going to get as big as a move down in the S&P 500 that you will in the Qs. So that is significant. We just wiped out all of those gains from January 13th. Okay? Very, very important, right? We broke the 100-day moving average and just ripped all the way down there, right? So in the Qs, could you say possibly we could bounce from here? Possibly. But if you take out this, you got the 200-day moving average of 491. And I think I was talking to my friend the other day, and we haven't reached the 200-day moving average, I think, since 2023. That was in the SPY, though. Let's see here. This is in the Qs, the last time we hit. Well, that was last August. But in the S&P, I believe it's 2023. So that's pretty crazy. Okay. Where are we at now? 501.20. 501.20. Like right here. We're pretty much at the lows of yesterday, right? Accepting the lower prices at the lows. All right, now let's look at futures. So you can back up. Where are we getting support? Well, not support, resistance, right? Look to the left. There's your last month's lows. There's your last month's lows in the white. And it's acting, it broke it, and now it's acting as resistance, right? So this support, the swing low, acting as resistance now. Don't know if we just continue to fall, right? Let's zoom it out a little bit. That's interesting. There's no 200-day moving average on this thing. This makes sense because it's not a it's a back adjusted contract. It's not a continuous contract. All right. So this is pretty bloody, right? This is where people get nervous. Yeah, it's pretty crazy. All right, let's look at the bond market. Right. Let's go to the bond market. Let's go to that 10-year yield and check out that. Okay. I've been mentioning this every time on my feed. I said, is this going to be a swing low? Anchored VWAP right here, right? And it has. And then I said, poor structure, and it is cleaned the poor structure up, right? Now you're at the 200-day moving average, right? Right here. You're actually at last year's anchored VWAP. This is right here. Okay, so this is last year's anchored VWAP. Now you're hitting the 200-day moving average. Like I said, the next move is the 4.13 yield. If you take that out, you go to 3.9 yield. Okay. Get more fear in this market, people are going to buy bonds. Who knows what will happen? Let's look at the dollar. Remember I've been talking about that descending wedge that this is compressing in, right? Descending wedge that this is compressing in. And I said generally it's a bullish thing because you break out to the upside. Well, look what it did. It broke out yesterday. It broke this wedge. So now this is not boding well for equities. Okay, so if that dollar keeps moving up, that is not a good thing for equities. Okay, it affects their balance sheets for stuff that they export from America. So, because then foreigners have to pay more, eats into their earnings. Usually it's not a really good thing. You don't really want to see a strong dollar. All right, so that's interesting. Now the VIX at your 30 days out of fear. Yeah, we're at a 20, pretty much almost a 21 VIX right now. We're at a 21 VIX. Now every time we've kind of pumped up here, well, obviously this is the Japan carry trade, I believe. The yen carry trade, I believe that was that. Or you know what? That might have been. This is the yen carry trade. Went up to 68. Um, so this is, every time we kind of come around the 20s, we kind of lose steam. I don't know. It should be very big ranges today. It's the last day of the month. Expect some shenanigans later in the session. Either be a sell or a buy. That's usually like a crazy day, the last day of the month. All right. So be wary of that. All right. So that's your triple headed monster. Let's move on here. Let's go to the main event. Market profile, volume profile. Think my computer's up. Hope I don't see that again. Let's go here. All right. Looking at futures. Okay. We're looking at futures. And right off the bat, let's get my marker out. Yesterday was very interesting, okay? Because let's just talk about yesterday, right? Let's look at yesterday. So yesterday, the profile's not here now, but this was the profile, and I can draw it because it was a perfect bell curve, okay? Usually that means the auction is over. Usually you know you're going to go. Now, I, you could have went long here, and then you would have got this move, right? And that would have been normal. Okay, we're balanced. We're balanced, right? However, what happened yesterday? I'm going to show you guys real quick here on the internals. Okay, I'm going to show you what happened yesterday because yesterday was interesting. Okay, the market internals were never positive all day. That's usually the market's usually not going to go up, right? And tech was, well, Jesus, tech was down 4.15 by the end, but it was really the laggard of the day, right? But the overall market yesterday, it doesn't, like, if you look at the S&P 500 ADD minus 122, this is pretty bearish. This wasn't like this earlier in the day, okay? These numbers were only the Valdez too. They were only 1.1 to 1.1. There wasn't any big like thing to say that this market's going to just lose itself. In total, look at the white line. So that white line represents equal weight. Okay, it represents the overall market as if it was all not weighted. So you can see the overall market was stronger than what moves our market, right? And this is what happened. This is when, if you look at the SPX here, right? Notice these internals. So notice the equal weight is still not weak until right crosses that line. See, when the equal weight crosses that line to follow the market cap weight, that's when the market just dumped. Okay, I just wanted to show you that because this is what was making it range bound. Is financials was up big yesterday. Healthcare was up at one point. Okay, so you had this, the market just couldn't push down with those up and then it turned, and then that's where you got that sell-off. Okay, back to here. All right, so now we're back to here. We recapped yesterday, and just big levels on the chart. I had this big support level right here. Remember, this was that equal, this was that confluence low I talked about. That really, when you broke that, is when you got that emotional selling. Okay, which is expected. We were in this balance area, and we broke it. Remember, I kept saying, "Hey, we moved this most traded price down. That's bearish, right? That could mean lower prices." So, well, we got them, right? In this market, when it's so volatile, it's like a lot of the days the early sell-off happens, and then that's the move. This day, it was like went down, went up, and like I said, look at the profile. Before this move, you see it? Bell curve. And then it broke because of what I showed you about the equal weight getting weaker. Okay? So, now let's look at today. All right? So, number one level you always want to look at in a big move down is the 50% retracement of that move, which is 59.40.25. Okay? You got a bunch of single prints, a bunch of emotional selling. Okay? Because you didn't like hold, go down, hold, go down. It was just like boom, 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 right? Okay, so we know our 50% retracement, and we know this 59.50 level was the level that really broke, and we went down, right? So that we have that there. Okay. Now we have a new demand zone right here. Okay, and we have our overnight session right here, and the lows right here. Okay, and we have a kind of a balanced profile, right? Look at this most traded prices right here. That's where the overnight is right here, 558.86. That's the most traded price of the overnight, and we're right there. Okay, so we did dip down lower, and now we're kind of balanced, right? Right. That's kind of just showing that this doesn't look ultra bullish. This doesn't look ultra bearish. However, this is a spike. So look at this as a spike down, right? And how you judge this spike rules is anything within this spike is considered bearish because you're accepting lower prices. The market's saying right now, well, we closed here and prices here. We're accepting these lower prices. That could just mean one or two things. We can just do this today, or we can do that and then do one more leg lower, right? Or we maybe move up, but maybe we bounce off up here, right? Still pretty bearish. Okay, so levels that I'm looking at. Okay, so it's basically this right here. From the 50% retracement, let's say the breakdown level, the breakout level down, you got the single prints right up here, and you have the midpoint. Okay, right there. Bears need to defend all the way up into that point. Okay, now you have demand down here. Okay, you have an overnight high that got bought. Right, so this area becomes bull's defense, and bears want to break that. Like I said, you can go all the way up here, and it's still bearish, and roll over. Okay, so with that being said, let's just get right into scenarios. I think I'm only going to have time to do the S&P 500 today. All right, because I got to start to prep for the day. So let's do the S&P 500, the ES. All right, so right here, let's do bear first because they're in control. All right, so like I said, this area, you want bears to defend it, right? This really whole area, but like I'm gonna say, and then you want bears to break this demand zone with the overnight lows. Okay. Now, what I'm going to do here is redraw. Okay, because there's some levels down there. All right. So let's redraw this right about here, this area and this area. Okay. Price is right at the most traded price of the overnight. That's kind of a balanced profile. So I'm not going to say that's longs, that's shorts. It's probably equilibrium there. Okay. So, like I said, here's the bearish case. Okay, what we could do, any one of these single prints gets resistance that's bearish, you can go up. Come through this most traded price, you're going to probably to test this overnight low. If you break it and break this demand, you're going to go down to this high volume node. It's probably around 50. This is 5830. 5830. Okay. That's a composite high volume node from the past. Okay. Then you have a demand zone here. You have a demand zone here. Okay. That's probably where we might go. Okay. Now, because bears are in control, if they actually moved up into these single prints, you got the 50% retracement. Remember the breakout area from yesterday. If you come up here and you wick like that, that is bearish, and we could just take a tumble down. Now, I don't think we take a double down all the way here. I think at this case you start to balance off in here and create new value. Create new value. Okay? That's what I'm looking at today. Right now, as far as the bull, before I go here, of course, we have this big demand zone here with the overnight lows. And you have demand here from the past, right here around 59, probably 58.45 about. Let's just give you the exact level here. 46, 58.46, and then you had the 58.30 high volume node here. Okay, I don't think we go much lower than that, but we have to see. All right, so in this case, and you have this, right? Now we have a lot of single prints. All right, we got to talk about it. Elfie, right? It's just the inverse Elfie, all right? Because can a toothpick hold an elephant? No. But if you inverse that, we have to inverse it to go up. So generally, these single prints are weak structure. See, there's very thin volume here. So they shouldn't, in a strong market, be resistant. You should rip right through them. Okay? You should rip right through them. So if we're looking at this, all right, what I would kind of like to see, if the market's not super weak, okay, you could get a dead cat bounce there. You could get some type of bounce if we drop down, go through this most trader price, right? Go buy yesterday's lows. That might get bought, right? And that might take this move and you start ripping through these singles. And maybe you go back to the bottom of that balance that got broken, right? I could also see a bear trap where we go down, break the overnight lows, maybe tag that demand and start to bounce up. Now, this one might not be as high. You might go up to here. Now, there's always the case, okay, that we do this. We either do this and then do this, or we do this and do this, right? Because then we can bring down the most traded price of the week here. And then as you do that, then you can go lower. Okay? Because if you don't do that, price will return back to value. Okay? You want value to follow price, and if it can't, price returns back to value. And that would be around 59.72. 59.70. Okay? Yes, most traded price is VPOC. So I could say sometimes in my Discord I'll say VPOC month, VPOC year, VPOC week. But generally when I'm speaking, like for myself, I'll say the VPOC for today. You know, it's the most traded price. All right. So hopefully that all made sense. All right. I apologize earlier. My computer crashed, and that hasn't happened in a long time. So, but anyway, Hopefully you enjoyed that. Do me a favor, just smash the like button as I prepare today for today's market. All right. And of course, as always, hopefully you can join me. I do this every morning. Give you the lowdown. Try not to have my computer crash. Give you the story, and just give you a different way to look at the markets. Now, I did fool around yesterday with putting bars over this chart, and it works. However, it just seems so congested. It's just like bars laying over my market profile and volume profiles. I have to figure out a way to make them look pleasing to the eye because like it's very hard to concentrate. Okay, so I'm gonna try to see if I can do that where it's like everybody sees bars where they're like familiar with, and everybody sees my market profile and buying profiles. I wish I could turn one off or on like just by a click of a button. I don't see that I could do that yet, but anyway, everybody have a great weekend. Remember what I'm saying right now. Today is the last trading day of the month. Next week it's March. Tomorrow's March, but like next trading month starts next Monday. So just be prepared for if you're in the markets later in the day from 3 o'clock on. There could be some real shady things happens at like 3:30, 3:40, 3:50, and it's just the end of the month. So you could rip up. Who knows? All right, or rip down. I don't know. All right. So everybody have a great day. No trades of trade, and stay green. And everybody have a great weekend. And I'll see everybody back